What's up, YouTube? All right, guys, so this is the second part of the course, or the second lesson. So if you're new to this, please head over and watch the first video so you get an understanding of what to expect from this course. But from the last video, I stated that we're going to start talking about live trading. So you guys are going to get in a snapshot of, what I look for and how I place trades. We've got live videos of real trades being placed. And I'm just going to talk you through the mental process because, all over the internet, everyone is putting up videos of how they trade, or they're showing any profits or maybe losses, but they don't get down to the nitty gritty stuff. People that watch these videos, they want to know, why did you buy? What were you feeling? What was your conviction that made you believe that price was going to go in a certain direction? So I'm going to use this video now to introduce to you the system that I use and how I'm able to pick certain spots in the market when the market's on and effectively just trade it. One more thing. I genuinely believe that when people come across this channel, they're going to go to this video first before anything else. Maybe I'm going to have to change the title because the title is going to say live trading example, and people are going to zoom in and they're going to want to know how I interpret the behavior of the market. Now remember, I say it all the time, I know nothing. I can only go by what I'm seeing. I can't make an assumption of where it's going to go next. I can't make any prediction or say that, dollar yen's going to go here, you mark my words. That sort of approach sets me up for expectation. 9 times out of 10, I'm going to be disheartened if it doesn't come out to fruition. But we have to be realistic. Of course, we're looking at prices and charts to try and work out what's going on, because Forex itself is very cryptic. You're dealing with millions of people exchanging value in one moment. Now, every single moment is unique. And that's from Mark Douglas. He stated that in Trading in the Zone. He's the guy that has completely revolutionized the way I trade, and it was his mindset practice where I came to a realization and come to appreciate the importance of thinking in terms of probability. Now, the system that I'm going to be talking about, I'm going to be only discussing it briefly, all right? The reason being is because there's a couple of other things that I need to put in place before we get into the nitty-gritty stuff. All right, I know you guys are going to want to know how this system works. The best part is this system's free of charge. However, there has to be an element of discipline. I said to you before, if I had my time again, I would completely forget what system's out there and I would focus on my mindset. Because if I can get any of you guys to tweak your mindset, when you approach trading, you're going to have clarity and you're going to be aware of so many things that could happen, rather than have to experience them and lose money at the same time. Now, I'm not saying that what I'm going to tell you is you're not going to lose money. It's part and parcel. You will lose money in this game because not every trade's going to be a winner. But over the long term, you're going to be making decisions based on what you see in front of you. But what you're going to be doing is you're going to be managing your emotional behavior behind the scenes. You're going to be aware of, are you feeling anxious? Is there a little bit of concern about this trade? Are you happy with the risk? This course is going to effectively help you manage the expectations of an outcome that you have no idea about. It's weird, isn't it? We're dealing in the concept of uncertainty, guys. So realistically, I should say this. Why should you have an opinion or feel an emotion on an outcome that you have no idea about? It's like being scared of nothing. But that's the problem with the human mind. We set expectations. We want to seek the safest option. And that's how our brains have been programmed. That's how we're wired. I mean, it's in our everyday. Look at insurance. People buy a car. They know they have to insure it. Why? Because they want to take away the fear of, getting arrested, being fined, losing their license, or if they do have a collision, how much are they going to have to pay out? And then you've got the issue of, if you haven't got insurance, what repercussions are you going to get from that? So our natural instinct is to create the safest option. What's going to be safe for us? Now, guys, You can't have that sort of mentality in trading. You have to be fearless when it comes to trading. You have to be impulsive. You have to make a conviction and stick with it. There's no time to beat around the bush and be like, maybe if, what if, what if, what if. During your stage of thinking, what if, you've missed the move. If you know how much money you're going to put down, you know how much your risk is, place the trade. Don't procrastinate. I've seen so many guys put on Twitter about make sure you're rigorous, make sure you get your analysis, prepare. Fuck that. You can't prepare enough because you're dealing with uncertainty. You don't know that once you place your trade, your profit target could be hit within minutes, or your stop loss could be hit within minutes. You don't know. So you have to give yourself a fair chance and accept that you've got no idea what's going to happen next. So why should you care about it? And it's really easy to say that, but as time goes on, the more I keep repeating it to you, the more you're going to come to the realization and say, you know what, that's right. If I have no control of an uncertain event, why am I trying to control it? Right, I'm going to press play and we're going to watch how this trade plays out. So I'm going to talk you through what's going on. Dollar yen has been previously dropping. The 50-day moving average is showing me that the market makers were in a current markdown phase. Like I said to you, I will go through these terms at a later point, so just bear with me on this and for this video. It came down to the bottom here and I could see that it hit the range daily low, and then usually what happens from that point is price always tends to rebound from that area. We have to also pay attention to the fact that price is so far away from the actual moving average. Reversion is in play. Now, just to note, wherever price is in relation to the moving averages, whether you look into the 15-minute time frame and try and compare the moving average to the 5-minute time frame, it's not really going to stand. Right? If you look at the 15-minute time frame on any chart and pull the 50-day moving average, if you see how far away it is from the moving average, but then you drop down a time frame, you're going to see it's going to be much more closer to it. So I base the decision on what's going on at this point in time. All right, so just keep that in mind. So whilst we're waiting for price to bounce off the range daily low, which is down here, it reverts back to the mean. I see notable volume coming here, which is this green candle. The 200-day moving average is this dotted line here. Now you can see loads of lines all over the place. I've put in these custom indicators, which gives me the actual pricing every 10 pips, because as a trader as a scalper, I'm only looking for about 10-15 pips. 10 pips for a scalper is like a swing trade. You know, it's a lot of exposure, especially if you're dealing with heavy lots, because that's what a lot of scalpers tend to do. But for the nature of this video, I'm only using small lot sizes to demonstrate how I've made my decision to enter into this trade. So this area here, over my time with using this system, I found that these two little fork candlesticks here, probably the only time where I'll start talking about what candlesticks mean to me based on what I interpret using this system. And when you guys use this system, you'll start to see things happening, right? You'll start seeing candlesticks behaving in a certain way only when you understand how this system works. All right, I know I'm talking cryptic, all right, but this video is just briefly explaining the system. I'm going to get to how to use this system in a later video, but first we've got to get your mind right. We've got to get you guys charged and ready for what's to come, because this system, it makes you have to think counterintuitively. That's the best way to put it. All right. So this red candle and this green candle here, to me, the red candle is when the market makers come into the market. They're either doing a stop hunt, they're gaining orders for their longs or closing shorts. 9 times out of 10, when this happens, climatic behavior comes in and sends price down. it's making the retail traders believe that we're going to go for a continuation to the downside. So if we look, it bottomed here, made a high, found resistance at the 200-day moving average. This long candlestick here was giving the retail traders the impression that price had rejected this area and then we're going to continue to the downside, as it did there. Continued, pulled back, still finding resistance at the 50-day, and then it continued to go to the downside. It was this candle here that made the retail traders step in and go short. They set their stop losses, and then the candlestick straight after took those stops out. And this is how the market makers get the liquidity. This is how they manipulate the market. This is how and why retail traders always find that whenever they enter into a position, right, it always hits their stop, does something, and then goes in the direction it originally was going to go to based on how that trader set in. So we'll talk about that in another video as well. So you can see there's a lot of sideways movement after this green candle appeared. All right. This was the London Open. You can see the two figures there, LO, London Open. We've got London Open, New York Open, and the London Close. All right. Now, this is where it starts to get interesting. I normally trade the opens of the London Open and the New York Open. Depending on what's going on in between is going to determine whether or not I'm going to enter in this area here. Because, I mean, I could have entered here as well. I could have took this trade and took about 5-6 pips from there. But it was marginal for me. I knew that dollar yen had previously experienced a markdown phase. Now, if you see these red candles here, you can see them appearing. This is where the market makers are getting their longs, right? This is where it gets confusing. Market makers are building their longs at the lowest possible price in anticipation to close them higher at a later point, but they're also closing shorts at the same time, which is how they create the liquidity, right? Because you can imagine if things are tanking here, how many retail traders are stepping, even banks. You know, I've mentioned that there's two types of money. There's smart money and dumb money. These are the words of trader at home, all right? There's smart money and dumb money. Which side are you on? And the messed up thing is market makers are smart money, but they can also behave like dumb money too, because they will get price to the areas of liquidity so that they can fulfill their orders. Market makers make money on commissions on orders being filled for their clients and everything else that goes with it. Research what a market maker is and understand how it operates. Then you'll understand this, right? So this is where I start to look at the entry levels, right? So I entered a little bit prematurely on this trade here. All right, I zoomed into the 1 minute time frame, and where I entered, which you'll see in a minute in the video, notable volume came in, and I made the conviction that we were going to go to the upside to try and take out the next key area, which is the 104,500 mark. So on the 5 minute time frame, if you pay attention to the 104,400 area, you can see there was a lot of support in this area here. It was resistance, 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 support, and another element of support. And then we've got this area here for support as well. Now, at the same time, what I'm seeing is the 50-day is edging upwards. All right. The 200-day is coming to kiss the 50-day. But what I'm looking for is the market maker's behavior. So I noticed the buildup of these green candles and blue candles. Look at the volume at the bottom, right? It's above average. And forget this line here, guys. This line is nothing to do with the actual indicator. It's just the play button at the bottom. All right. Anyways, so more than above average volume. Now, in terms of volume, I'm talking tick volume. How many times does price exchange hands at that point in time? All right. Now, let's just pay attention to something. Conventional wisdom would say that dollar yen had made a high here, pulled back, then made a lower high. I'd say 85% of day traders would have entered short there, right? in anticipation that dollar yen, sorry, that this trade would go south and test the 104.300, the 104.200 area. Okay? That's what the market makers want you to believe. That's how they create the liquidity. So you've got the traders who put in their shorts in this area here. You see these pin bars that appear? Retail traders step in, put their shorts, and then they put their stops above here. All right. The market makers can see those shorts, but the market makers need to move the market in order to take those shorts out. So what they do is they create the illusion that price is going to sell off, because most traders are going to look left and say, right, we've been selling off, we're in a downtrend, this is what you call a pullback, and then we're going to look for a continuation. Okay? The signal for me was this candlestick here. Now, this is understanding the actual system itself. This candlestick here, to conventional wisdom, to retail traders, to what all the information that's available on the internet today about candlesticks, all right, that there is doji spinning. I don't even know what it is. Do you see what I mean? Like, I've become so involved with how this system works. It makes you disengage with conventional wisdom on how to approach trading. All right. I mean, it's a pin bar. Is it a doji? Please, I don't know what it is, but I do know it's stopping volume. Because if I look down here, price has exchanged hands several times, a lot of times in this area here, right? It went to the upside, came to the downside, couldn't find the level, but it finished negatively on massive volume. This little candle here, to me, tells me that stopping volume is in play, which tells me that the market makers don't have an interest in sending price any lower. So that's the first clue. Now you've got to remember, guys, it's easy for me to say that looking at the chart as it is now. All right. And when we're in real live trading situations, if I see that candle appear, I'm waiting for a confirmation of that. Right. And I got that confirmation on this video through this green candlestick here. And if you look at the confluence of what's going on in price in this direction here, the 104.400 mark showed the support. So that there was telling me the market makers, they didn't want price to go lower anymore. They had an interest in getting their longs closed at higher prices. Now the longs that I'm talking about, potentially here, these red candlesticks here as well. Okay. We're going to press play on the video and we're going to see where price goes. One thing you have to understand as well. This system makes you have to think in a sort of a creative way, right? It doesn't put it in plain sight for you like most systems available out there are being sold on. It makes you think. It makes you think, right, what could be happening at this point in time? It makes you think what is happening now, because all you're dealing with is the information in front of you. You know, I'm not a trader that has loads of screens, right? I focus on one screen. Let's look at it like this. How many scopes does a sniper use before he takes his shot? He's using one scope. That's it. He ain't looking or flicking in between scopes before he takes his shot. He uses the one scope, takes the shot, and if he's successful, he's done a good job. Same principle with me here. I only use my laptop or my desktop. I don't mix in between. I don't link them both up. Nothing at all. I'm not the trader that has loads of screens. I've been there, I've done it, and it's more of a disturbance for me because I'm looking left, I'm looking right, and it makes me, I become hesitant. You know, as much as I talk in my blog and in the book that I've wrote about, you know, have no emotions, learn to manage your expectations and X, Y, Z. Let's be realistic. I'm fucking human at the end of the day. I make mistakes. I'm not saying to you I'm flawless with my trading. Hell no. But over a period of time, if I learn to manage my behavior and be aware of when I'm starting to go wrong, I can then pull back and say, right, okay, Tino, sit tight. Right? It's happening again. Just fold your laptop, walk out the house. That's what you have to do. You have to get yourself into that position where you're committed to saying, look, I'm not going to make the mistake. And if you make the mistake unintentionally, fair enough. Don't be so hard on yourself. But if you make it recklessly, where you knew in the back of your mind, you know straight away that, yeah, you know you're going to fuck up in a minute. All right? There's two types of mistakes there, you know? Anyway, we're looking at this chart here. So this is in the real time right now. I'm paying attention to this blue area here. So I'm going to pause the video. All right. This blue area for me, based on how I trade using this system, I've seen it over and over and over again. All right. The best way to say it to you is wherever I see a red candle, I'm going to anticipate that price is going to visit that area at some point. That's all I look for. I look at see where the candlesticks are. I mean, if we look over here, see that red candle, this red candle, and this one, right? That's showing me that market makers are building longs and closing shorts at the same time. But then if we look, it follows it straight away. Same again. We've got it down here, follows it all the way back up. When you get this system and you install the indicators, okay, try it. Look back as often as you want, as far as you want, and find red candles. Wherever you see a red candle, I'd say 85% of the time, there's going to be candlesticks preceding it. And that's where you'll start to understand why those candlesticks always precede the red candlesticks and the green candlesticks as well. Don't get it twisted. We're not just focusing on the red. We talk about the greens as well, right? But look, I'm not going to confuse you anymore, guys. I'm so sorry, right? Let me just get back to this video. You see what I mean? I'll lose my trail of thought. When I get into this trading discussion, right, it could go on for hours and I'll just take you on tangents. But I did warn you at the start of the video, or the last video, I go 100 miles an hour and I can chop and change in between discussions, but please forgive me and try and help me stay focused. Anyway, back to this. I dropped down to the 15-minute time frame. And if you noticed on the 5-minute time frame, that big red green candle that was present, it's now present on the 15-minute time frame. The 104,400 area is showing strong support. All right. That there for me was the conviction that I'm in this trade now, and I know, or I'm anticipating, that it's going to go and hit the upside at some point. It just can't go any further beyond the 50-day. Otherwise, I'm going to close the trade and leave. All right. This blue area, as I said to you, is where ideally my target profit was going to be. But if you can see closely here, it says RDH. That's the range daily high. All right. So I'm looking, when I see the range daily high so close to price, depending on how price has been throughout the sessions, usually it's going to get hit. All right. Now, with the confluence of the monthly resistance bar up here, if you can see here, when the monthly resistance and the range daily high are close, experience tells me that most of the time it's going to hit. But there are certain factors that have to come into play, which I'm not going to go into too much detail for me to, for you to make the conviction that price is going to hit that area. Because I can't just say, right, yeah, I'm going to place a trade, it's going to hit the MR1 and the range daily high and just leave it. You do have to be calculated with your decisions, but it all has to be on an assumption. Certain things have to come into play. But as you get to the right mindset and understand that you have no control of what's going to happen next, you make a decision, you make your conviction, and you allow it to play out. All right. So I looked here on the 15-minute time frame. Things look like they're setting up okay. So I'll press play. One thing also, guys, my advice to you is when you do get these indicators, it pays to actually sit and watch price. There have been days where I have just sat at my screen and just stared at it for ages. All right, so I'm just going to pause again. Let me just wait for me to... There you go. All right, so look at the green candlesticks here. Support is coming in at the 104,400. So I'm continuously being reaffirmed that this area here, there is support. Market makers don't want price to go any lower. What they're doing here, if you notice the red candles, what they're doing is they're building their longs at lower prices with anticipation to get them closed at a higher price. At the same time, they're creating the liquidity from the retail traders to enter so that they can get their longs closed at higher prices. Because remember, when you see price rising, I can guarantee most of the people, if I ask them this question, will give me the same answer. And that question is this. If you see price go from this point here to this point here, let's assume, right, you would agree that that was a bit of an uptrend, yeah? So you would say that the buyers were in control, right? If we're agreed on that, happy days. But that's where the catch is. See, when I came to understand this, it completely changed the way I traded because I was aware of what was going on. And this is what Trader at Home talks about. He mentions this so often. And once you know this, you will see price differently. You will then get to grips with, you'll be a step closer to understanding how the market really works. So back again, from here all the way to here, all right, you're going to agree and say that buyers are in control. But in order for the buyers to be in control, what are they buying? In other words, who is selling it to them? So who's in control? The sellers. Remember, because price is rising, it's rising because buyers are stepping in to take orders that are being made by the market makers. So the market makers are selling these orders to these traders, making them believe that there's an uptrend. But what's really happening is the market makers, in this instance, are building their shorts at higher prices. I can imagine right now you're thinking, what, say that again? All right. But I'm not going to go into too much detail. I keep giving and taking with this, man. I feel really bad. The next video is going to be the discussion on this, right? So I can go into it more detail, but I'm time conscious right now because I don't want you to just sit there listening to me about it when I'm going to talk about it in more depth in a later video, all right? But just, play that bit back, right? Just remember, when price is rising, it's not because buyers are in control. It's because you are being sold to. The buyers are being sold to. So who is really in control is the sellers. All right. So this is where, when I'm looking at this trade, when I placed it on the Friday, I was expecting, all right, for this area to be broken because there was so many factors coming into play to show that price favored higher territory. And we were so close to the 104,500 mark. But more importantly, one thing I haven't said, which I will say now. Market makers build their positions above and below key areas. In this instance, you can see most traders would look at this, like I've drawn this triangle, here's pendant, whatever it is, I don't even know what that's called, for example. Or they'll draw a range, they'll get a box, and they'll put a box around it, and they'll trade the box or the range, all right? Most people, if they put the range here from this high to this low, all right, it would have broken out here And 9 times out of 10, most traders would have stepped in thinking that the price broke out of the box, so I'm going to go short. And then before you know it, it broke out to the upside. So that's how people get manipulated. All right. But what I'm trying to say to you is market makers, they build their positions below key areas and above. So in this instance, we are below the key area of the 104,500. Psychologically, people are impressionable with numbers, right? You never see something being sold in a shop for, £25 or £15. It's always $14.99 or $24.99. And a small impression on the mind, right? When it's happening across millions and millions of people, all right, it's going to work. So something that's $24.99 isn't as expensive as what something it costs £25. 25 is an authoritative figure when it comes to looking at it and it's being $24.99. I know you guys are aware of that phenomena. Okay, £99 and 99 pence. It's not going to be ever £100. Always see that the amount of money that they want to give you the discount on is always a round number. Just have a look. Every number or any discount that is being offered in any store is always a round number. But when it comes to actually buying something, it's always at the closest top end range of the highest number that they believe that they can charge, which is going to entice someone to buy it. That's another conversation. But that principle applies in the market also. Okay? So, market makers, they're building their longs below this key area in anticipation to close them at a higher point. Likewise, if they were to do this sort of behavior above the 104,500, they'd be building their shorts above key notable areas with anticipation to close them at a lower price. And the reason they're doing that is because they're trying their hardest to get the best price just above or below this key area. It's a halfway point of the number 104. You got the 104 down here, you got the halfway point, and then you've got the 105 at the top. All right. So let's play the video. So you can see I've got my mouse at that point in time, and I'm going to start labeling things here. See, what I've done here is I've put down the arrows. So I'm paying attention to the area that the market makers are stepping in and supporting. Right? It's a little visual thing that I do. It doesn't mean anything. It's not going to change the course of the where price is going to go, but it's something visual for me. Right? Because when you're staring in one space, I literally look at the candlestick, every single candlestick as it moves. All right? I'm paying attention to it because you'll see price behave in a certain way where a pump of money will come in. Right? And that pump there, when you see it so many times, usually it's going to follow through with what you see it do afterwards. Now, I'll get into that as well in other videos. But you can see here that price is being held in this area. This is in real time as well. And the market has been very slow. Last week it was really slow. Usually it's fast. And it's not slow because the computer's slow. This is the actual speed that price was behaving at on that Friday. So this is where my attention starts to get taken here. All right. I can see it's starting to recover from that little down sell here. All right, there. Now it's going to look like it's going to break out and take out this high here. See, getting busy there. And there's the breakout. This is the 1 minute time frame. Now we've broken out. Now, as a live trade, I'm paying attention now. I am so focused on this because you can see how fast it broke out, but you can also appreciate it will also go the reverse as well in a split second. So the 104,500 mark gets taken. I shouldn't have said that, man. I should have allowed it to, for you to anticipate, is it going to hit or not? All right. So the 10400 is hit now. 500, sorry. I'll start changing in between time frames around about this time. At this point, I'm thinking, okay, I've got 14 pips locked in, which is 2 positions at 7 pips each. Or 3, actually. I had 3 positions on this. Yeah, I had 3 positions. And you can see how aggressive price gets. So I zoomed out, gone into the 5-minute time frame just to scale out where I am and where price is. Am I coming against any other forms of resistance? You'll notice also in a few seconds when I change the screen, I'll be highlighting the daily open. Now the daily open, there you go. I've took a screenshot. So, because that's how kind I am. I'm taking screenshots of these things so I can get them over to you guys so you can look at. Breakout. There we go. All right, look at that. Blue candle. I flipped over to gold to see what gold was doing. Now we've got the 15-minute time frame coming up. The blue area. All right, I'm anticipating it's going to hit that. But also, if it goes, I think I've got it on here as well. Waiting for price to hit the daily open. You can see how aggressive price has moved. There you go. See this line here. This is the daily open. This white line here. Now, because of how close we were to the daily open, usually price always tries to go and hit the daily open where it previously opened in the Japanese session, in the Asian session. All right. And that little flick down there. This is the small account, guys, that I'm trading, which I'll show you the results of in the next video. At this point now, I know for a fact, as it's a scalp, I'm thinking to myself, how long am I going to sit in this trade for? I can see that momentum is coming into the market. Now, you've got to remember, I entered here. So it was an hour before before it broke out. So I entered here and I sat through this consolidation right here. And because I was paying attention to price, I'm just going to pause it. Because I was paying attention to price, I'm zoned in and I'm looking at what every candlestick is doing and how it's being printed. You start to build a consensus about what is the market maker's intention here. All right. Do we feel like there's pressure from the buyers or the sellers? That's conventional wisdom. When I talk pressure, I'm talking about how hard are the market makers trying to make the retail traders believe that this is going to continue to the downside. That's the pressure I'm talking about. And it's not the kind of thing that conventional trading systems will tell you. You guys will look at it and say, who's in control, the buyers or the sellers? Well, if we use the principle of what I explained to you earlier on about when price is rising, who's in control, is it the buyers or the sellers? It will be quite a confusing thing to explain. All right. So what I'm paying attention to by looking at the smaller time frames is how often are the market makers trying to manipulate the retail traders to start filling in the orders. All right. So that they can get their whatever it is they're trying to do, get their longs closed at higher prices, get their shorts filled at lower prices as well. All right. Now let's allow this to continue. Well, just before we do that, actually, you can see slightly, this is the range daily high and we are really close to hitting it. There's massive momentum coming up here. And if you remember as well, I said to you about the red candles. Well, if you look at all the corresponding red candles, you can see it's taking it out. Any more? Yep, over here, taking it out in that area. Near enough taking it out in that area. Let's go to the greens. Wherever there's a green candle, usually there's going to be a red. We look right. Red candles here. Look down. Red candles there. Look down. Candle. Climax is there. And there's only so often that this happens, guys. If you're just going to download this software and then try and marry up the green candle and say, yeah, it's going to be red on the other side, it won't work. You have to expose yourself to certain screen times so that you can see, where where are they going to be taking price at a later point? What's the likelihood of them returning price to retrace this area here? You know? Anyways, so just to recap here, we've broken through the 104,500 mark. At this point, I know as a scalper, I've made a lot of pips. Now I'm just riding the momentum. All right, a few moments ago, I said to you that being a trader is about your ability to adapt. You know, if I were to just set 10 pip win on these positions here, all right, I'd be cutting myself short. But at the same time, I didn't know that price was going to behave like this. But what I did know was that momentum was coming into the market. Now, when it comes to a position where you're thinking, right, do I hold this or not? Experience has shown me when momentum is present. See, this move was very fast. Okay. It's jumped nearly 20 pips at 50 or so from the bottom slight here, about 12, 15 pips. Okay. It's jumped that much in such a short space of time. And we're approaching the time at that point, 108, yeah. We're coming towards a new candle, a new 5-minute candle as well. Okay. And what I'm trying to get at is you're never going to know how long you can hold a trade for. That's why we have target profits in place. But because of my experience and how much I've exposed myself to seeing these types of behaviors from the market makers, excuse me, I intuitively just said to myself, hold this trade. Because the build-up of the green candles here, the notable volume coming in, the stopping volume, which is this little red candle here, all right, and the holding pressure of the 104,400 area, I wasn't going to allow, or should I say accept, that the market makers would have been happy to just send price up slightly and then not do anything about it afterwards, and then just go to the downside. But then who am I? Who am I to make that statement and have that opinion about the market? The market makers can do whatever the fuck they like. You know? But these are the sort of things that do pass my mind. So when it comes to making a decision on whether or not to hold a trend, if you believe that price is going to keep going in the favored direction, just continuously remind yourself that you never knew it was going to go in that direction in the first place. All you had to base that decision was the support at this area here and momentum. All right. Forgive me if it's somewhat confusing. I'm going to try and summarize it again in another video. I'm always going to be saying to you guys, another video. It's just giving me more inspiration to keep doing more videos. But hey, so let's go back to this. So we can agree that, you know, they broke out the key area. Market makers have stepped in, okay, and they've now started to close their longs that they previously built in higher areas. Okay, so let's keep it playing now. Hit the 104,600. Now it's starting to pull back. Now people, the retail traders, are coming in. The guys who want a piece of the action. They've like, oh my God, look what's happened. My stop's been hit. Let me get back in and try and catch this trade. Okay, this is where you're now seeing it's going to start bouncing. And then there's going to be another push where the market makers are going to make the retail traders believe that, yeah, you're in for a good home run move here. So those traders are going to keep their positions open, which then the market makers are going to want to start a new phase to send price back down. Now, I'm still in the trade. Okay. Now, I'm only talking like this because I know what the outcome was of that. Look at that push. There's the push that the market makers did, but look how quick it snapped back. All right. Now the market makers are like making the guys believe, yeah, we're in for a good run here. Okay. Liquidity's coming in. Now I'm looking back at gold, and now they're going to try and keep the climax in place, because what's happening now, the market makers are setting up to sell off. There's your final push. So I'm looking at this now thinking, right, when can I get out? When can I get out? Where is the signal for me to get out? Now, what I just said to you about the climax, I know now I'm involved in climatic behavior. Okay, everybody's now rushing into dollar yen. The day traders are trying to rush into dollar yen to try and get a piece of this action here. All right, we are now at the monthly resistance. I knew I was going to get out of this if I'm starting to close off all my boxes and all that. So I'm at monthly resistance. I know now that I need to close this trade. All right, I did leave a bit of money on the table, and I thought, is it going to go for one more hit? But then something happened, which gave me my signal to close it. And I don't know if it's going to be visible on here. Here we go. Right, so this is the hour time frame. You can see we're approaching the 200-day. So we're already in resistance area. Okay, we've hit the range daily high. We've got resistance in the upside. This is the 4-hour time frame. This is visually for you guys. You can see now the green candle stepping in. So it's getting busy. Climatic behavior. We're at the range daily high. There's your candle. There's my signal. On the 1 minute time frame, there's the signal there. At that point, I was like, okay, let me pay attention, because usually what happens is it bounces back from this candle whenever there's a sell-off, and it did just that. But I wasn't convinced that this move was going to continue, only because the wick that appeared here, all right, candle didn't close in the upside of it. You know, it just didn't close. It didn't show me the strength. I knew I was in a climatic candle setup. You know, market makers were making the retail traders believe that dollar yen's going to continue to the upside. So they need to induce these traders to put their money down and get their stop losses put in place so that the market makers can use those stop losses as liquidity to get their orders filled. So I know I keep saying so. All right. At this point now, I'm thinking to myself, right, it's not going to try and hit the monthly resistance again. Now there's a point where I have to manage the trade now. I'm paying attention to what the candlestick is doing. You can see it's bouncing up and down, up and down. In that moment, all right, money's exchanging hands at a certain area and it's being brought back down again. I'm sensing that the pressure from the market makers, okay, they don't want price to go any further. But the retail traders are now stepping in because price has moved from this here. People now think a breakout has occurred and they want a piece of the action. That's why we're still seeing dollar yen still going to the upside, right? And that's why I still held the trade. But I'm starting to get a bit edgy on the fact that it's failing to close anywhere near the monthly resistance. I'm starting to make the conviction also that I need to get out of this trade, because the amount of times I've allowed winners to turn into losers is absolutely despicable, and I'm not going to allow it to happen again. Looking at the 1 minute time frame here, there's another stop in volume candle there. That little candle there. Big volume coming in. Small candlestick, big volume. One of the signals. Conventional traders will look at that and say, oh, pin bar, and then they'll play off the pin bar. Now, whenever price hits the range daily high or the range daily low, as I said earlier, it's always going to pull away from it. And that's exactly what happened. You see the red candlestick there? There was my signal. And then that's when I decided to, at the bottom there, you see 3 positions. Yeah. I just held for a few more seconds. Would there be any more support? Was there any interest from the market makers to send it higher? And how much did we make? Yeah, 125, 127 quid, or whatever it was on that trade. I was very heavily margined on this as well. Bad practice, but we'll talk about trading small accounts and being on margin. That's another discussion. And I want you guys to witness the closing of the trade. So I'll start looking around again, asking myself, are we still, is there still strength at the range daily high? Do the market makers want to send it further? Or the retail traders now stepping in, trying to get their best chance of trying to capture what they believe is a move to the upside? Keeping an eye on gold. You can see the correlation. Dollar was moving up, gold was moving up. Usually it's when gold's going up, dollar's going down. there was a final attempt to make the retail traders believe that, yep, we're going to go for the upside again. It's going to retest the monthly resistance. The climatic candles that appeared here was enough for anyone to know that things were going to change. I'm literally at this position. You see my fingers on the trigger. I'm waiting for that one moment. If the 104,600 mark gets broken completely, I'm out. So there you go. I took the trade, closed it straight away, impulsively, didn't hesitate. Well, I did hesitate, to be fair, but you can see we'll zoom back out. So we started here. Drawdown was quite a lot, to be fair, quite a lot of exposure on that move. But this is what you'll come to understand. This system it focuses very heavily on trading light. Now, in my experience, I mean, learning the system, I've blown so much money because I never started off trading light. I thought that once I understood this system, I could literally just take on the whole world with it, put down as much money as possible and hope for the best. Yeah, that's how you blow your accounts, guys. Simple as, right? But there are some instances where you do take calculated risks. This is a game of risk, guys. All right, there's no shying away from it. It's, for me, there are times where I would put down a lot of margin depending on how I'm feeling about the move itself. If it works, happy days. If it doesn't, then I know what I'm going to lose. That's one thing I can guarantee. I can tell you how much I'm going to lose. I can tell you how much I'm risking. All right, but I can't tell you how much I'm going to make. The trader that tells you how much he's going to make, just find out how much he loses in order to make that first. It's the gambler's principle. Go to a casino, ask any gambler in there, how much have you made tonight? He'll probably tell you, I made 80 quid. But then ask him how much he's lost. He'll probably say 300. But gamblers will never admit to their loss. All right, trader will tell you, I lost this, and it won't be happening again. And if they do talk about what they've made it within tight parameters and keeping their risk low. All right then, so I've had you here for about an hour now watching this real live trade. Now look, forgive me again if it's been a bit untidy. I'm bringing it to you straight up, raw, unedited, because it's about just giving you the content and relaying over to you guys how I trade. This is the first video of the live trading series playlist. So I'll be doing more of these trades. Every single day I trade, and I'm going to be recording everything, and we're just going to repeat the same process over and over again so that when you guys have the indicators, all right, you're going to be able to, become familiar with how and what areas and what price is doing, and you'll be able to understand everything better. Because when I got this system, all I had was the context that was put up on the internet by other traders. Now, what you'll find is if you do go and search the system, it will either take you to a website or a forum where you're going to have to code it. You're going to have to work out yourself how this system works, because the guy who created it didn't create it to make life easier for people. This guy's principle is, if I can give a man a fish, he eats for a day, but you teach him how to fish, he eats for a lifetime. So this is where you're going to start doing your homework. You're going to sit down, you're going to watch price, and you're going to learn this system, because once you learn it and once you become familiar with it, it can change everything. Now, I'm not giving you no false hope here. This system took me about 6 years to understand, but that was because for 7 years, right? It took me so long because I needed to fix my way of thinking, and that's how long it took me. The system, obviously, it makes money, and I've seen other traders that use it that are profitable from it. But I'm giving you guys a bit of a shortcut. I'm helping you guys out, and I'm guiding you to avoid having to wait that long. Now, I don't know how long it's going to take you guys to fix your mind. I'm not saying there's anything wrong with your mind, but what I'm saying is if 95% of traders are losing in this industry, there's something that's stopping them from losing, and 99% of the time it's the mindset. Now, through a video series like this that I'm creating, if I can help anyone and speed up the process of them coming up to speed with knowing how to use the system, I've done my job. You know, I'm bringing the value there to you guys, and I'm giving back, you know, because I've learned this system and I'm still learning it. You know, this system's not one where it's static in the essence where you're going to see the same thing happen over and over again. Well, to be frank, you do see the same thing happen over and over again. You just don't know when. That's the thing. So I hope you have enjoyed the video, guys. It's been a long video, and as I said, any mistakes, I apologize. It's unedited. I'm bringing it to you as organic as possible. All right. I just hope you do enjoy it. If you've got any feedback for me, any comments, chuck them in the, any questions, chuck them in the comments below. All right. I'll respond to them, and try and, think about your question as well, because if your question resonates with something, I'll do a video on it and respond to it. Because this is what I'm trying to achieve. I'm trying to get traders to communicate with each other, because trading, the industry trading itself is, it's a lonely business, but it's also a reclusive one as well. I've just been on Twitter and I've seen one guy posting that he made £21,000 profit, and that 29, 30, whatever it was. And the comments on there were just the typical, oh wow, well done kind of thing. And then he was responding to the comments where he was thanking the guys for saying well done. But then the comments like, can you share your screen? Can you show us your charts? Can you do this? Can you do that? Your entries and what have you? The decision-making process. And there's no response there. And I'm thinking to myself, well, look, you haven't learned something that is new. Yeah, you understand the principle of knowing when to buy and knowing when to sell. So why not share that? You've got the skill. You haven't patented it. It doesn't belong to you. It's something that you did yourself. You worked it out for yourself. If you can work it out, why can't you allow others to work it out? I don't know. That's the cloth that I'm cut from. It's about helping people. And given in the times that we are today, guys, loads of people, there's nothing wrong in helping. You can never hesitate to do good. An old Chinese proverb, and I'll stand to that. So much love to you guys. I hope you do enjoy it. Get ready for the next installment.